Hello, welcome everybody to the Hyperspace Challenge webinar series. This is an ongoing series that we have, covering topics of interest to you all and to the small businesses. And my name is Kelly Stafford. I am the Senior Program Manager for Hyperspace Challenge, and we bring you this webinar today in partnership with Catalyst Accelerator, my favorite little accelerator in Colorado Springs. So hi guys, hi Shay, and hi Kimar and Allison. It's great to have you guys here. This is brought to you by the Air Force Research Laboratory and also CNM Ingenuity to strengthen the connective tissue between diverse communities within the space industry. So the goal of today's event is to tell you a little bit about what's going on with venture capitalists and how we might navigate that, working with venture capitalists and what kind of questions you guys might have. So answering those. Thank you everybody again for joining. Shay, do you want to say a little bit about Catalyst?
Sure, thank you. We're really excited to co-host this webinar today. The Catalyst Accelerator is also funded through the Air Force Research Lab, and we're located up in Colorado Springs. I'm the program manager. Kamar Gartman is our program director, and Allison Booth is our program coordinator. And we're just really excited to be here with everybody and hear from the experts on the line. So thanks for having us.
Great, so glad you guys are here. And I'm going to turn it over to TJ Cook from Ingenuity Venture Fund, just not delay the good stuff any further. So TJ, take it away for us.
Hello, everybody. TJ Cook. I am the fund manager for Ingenuity Venture Fund. We are a pre-seed and seed stage fund that invests in New Mexico-based startups. And as part of building Hyperspace Challenge in the first place, and have learned a lot about the space startup environment through that. But I'm joined today by two true experts and living and breathing it every day, who are going to bring us a lot of wisdom and insights. No pressure, guys. That I hope will be helpful to us as entrepreneurs, trying to do amazing things using the space domain. I love everything New Mexico, so if you have any questions about New Mexico, things that are going on here, I'd love to talk to you about that. But today, this is really about the entrepreneurs in the room who are seeking insights. To kick it off, I'll start with an amazing, a really great article I read recently that is titled "Private Space Firms Had Their Worst Fundraising in a Decade." Private space firms had their worst funding raising in a decade. So on that note, we're going to get into it. The Entrepreneur's Guide to Space Investing. With me today are Nick Snoad and John Richmond. Nick, please introduce yourself. Say a little bit about Marlinspike.
Sure. Thanks, TJ. And thanks again to both Hyperspace and Catalyst for having us. Really, really excited to be here. So Nick Snoad, I'm with a fund called Marlinspike. We're a dual-use technology fund based out of the DC area. We tend to invest in four main verticals: so space, aerospace, autonomy, cyber, and then AI analytics. We tend to invest in multi-stage, but seed to B is our sweet spot. And so really great to be here.
Thanks, Nick. John.
Well, thanks, TJ. And yes, thanks to Hyperspace and Catalyst as well. I have an affinity for both New Mexico and Colorado. I grew up in Albuquerque, New Mexico, and I spent 4 years at a little school in Colorado Springs there, where they make you wear a uniform off campus. So love both states, and especially the entrepreneurs from the space, but space generally. So I'm a senior investment associate with Lockheed Martin Ventures, which is the strategic venture capital arm of Lockheed. We do all of the equity investments on behalf of the corporations. And I do our investments specifically on behalf of Lockheed Martin Space. We have 4 business areas, and we have an investor, at least one investor covering each business area. And we have 14 technology verticals. And I invest specifically in our comm and 5G vertical, our sensor technologies, quantum technologies, and cybersecurity. And we're adding a few more this year that have not been yet announced. But we're interested in technologies that align with virtually everything that Lockheed Martin Space is doing, and we'll talk a little bit more about specifically what we look for. We're early stage, primarily early stage fund. Series A is our sweet spot. We'll do seed, we'll do a little bit later rounds as well, but Series A is the sweet spot. And we're a dual use deep tech fund. So we're looking for both commercial government applications and companies that are solving hard technical problems. Nice to meet the group here.
Woohoo. Thanks for that, John. And just so everybody knows, I'm going to go into a rapid fire round specifically about Marlinspike and Lockheed Martin Ventures a little bit later. What we're going to do is start a little bit at a high level. What's the landscape here at this macro level? How does it apply to that space domain that we're all working in? And specifically, then we'll get into some Marlinspike and Lockheed Martin Ventures particulars, so that you can be informed specifically about these two funds, but also extend that to other funds you might be thinking about or talking to. So as I referenced that article, and Kelly, if you want to put that in the chat, although I wouldn't recommend it because don't want people getting depressed. We all know at this point that venture investment fell 38% from 2022 to 2023. That's overall venture investment. Space seems to me has always been that domain where if things are really going great in the macro environment, you might see people taking that risk. It's still a risky domain. It's a cold vacuum. It's very difficult. And I think you're seeing a lot of hits being taken in space within that overall slowdown. That being said, there are some trends that are upcoming. There are tailwinds in the form of our need to, as a country, to maintain leadership in space, and it's not a completely desperate time, I will say. So, John, Nick, either one of you could start off with saying, like, what are you excited about in terms of the upcoming trends at this macro level, the regulatory environment, regulations in general, government funding programs that you think are noteworthy and should be important for entrepreneurs to consider?
Sure. Happy to start, and maybe I'll start with the government side. So if everyone was watching, the budgets have all come out, and we've been watching to see, what the major program budgets are going to be within the Space Force. Looks like they got about a $30 billion top line. 14 billion went to 4 major areas. So launch, SATCOM operations, GPS replacement, and then missile defense. And it's pretty equally distributed with a little heavy emphasis on launch and SATCOM, I believe. So that leaves about 16 billion left within the Space Force's budget. Obviously, some of that's going to be used to keep the light on, ongoing operations, things like that. But we're specifically looking to see what comes out within that 16 billion for innovation dollars on the RDT&E side, and where is Space Force looking next. Ultimately, I think what we're seeing within space in general, and we'll get to the fundraising environment, the TAM hasn't necessarily been there yet, particularly on the commercial side. And so we're looking for what's going to happen next and what are going to be the next new and emerging technologies. I think we're looking for what are going to be critical applications that can only be done or enhanced in space. I.e., so that might be if you're seeing with SpaceX and T-Mobile's partnership on the telecom side, and there's Link and some others out there. So that could be a critical emerging area for us to watch. And then the second piece is maybe it's exquisite manufacturing, with semiconductors or biopharmaceuticals, things like that there's something to be said for operating in microgravity, that there's just a quality component there that can't be achieved terrestrially. So with the government funding side, looking to see where Space Force is going to invest. And ultimately, I think what's going to happen near term is they'll probably invest in first the enabling technologies that will enable a more robust ecosystem for those, i.e. On-orbit servicing, robotics, things like that. with then trying to also open up launch capacity in the next couple of, probably couple of years. And that's really the tailwinds that I think we're eyeing coming into 2024, 2025 and beyond as we look at opportunities.
It's awesome, Nick. I hear you talking in that dual use mode, right? You're looking for things that have that application in markets here on Earth that have that TAM, right? If it's not quite there yet in space, okay, but you are space interested and space savvy, what can you do in space that it can't be done on Earth, but sell into those bigger total addressable markets? So that's really well said. John, you want to follow up on that or add to it?
Sure. Yeah, I completely agree with Nick. I think for a while we thought that the commercial space market would have matured faster than it has. And at this point, I think the government still remains the primary procurer of commercial space technologies and will for the near term. But we're at kind of the beginning of a precipice. As of last year, there's over 100 DoD organizations dedicated to innovation and funding startups like yourselves. The government has talked about buying commercial services, and now we're seeing that the commercial program offices out of the Space Systems Center and the NRO actually have new emerging companies on contract for study or procurement contracts. So we're finally seeing that take place. The budget for commercial still remains fairly small, and Nick talked about where the majority of the money is going. So I think there's some work to be done, and the government is looking to see how industry, so particularly defense primes like Lockheed, will adopt, and they're highly encouraging the primes to integrate and work with startups. And as you probably see from companies like Anduril and Palantir, they're looking for new emerging primes as well to offer competition in the marketplace. So Lockheed views it as an opportunity to work with the best emerging startups to offer an integrated solution to the government. And I think given the downtrend over the last couple of years, firms like Lockheed Martin Ventures and others with capital deploy view it as a great opportunity. If you look at what we've done with our portfolio, we've been very active the last 2 years. We did 15 new investments last year, several of which were space companies, and 15 additional follow-on. So it's a great time if you're in the right market for space.
TJ, one other thing I would highlight, because you highlighted about the regulatory environment. Lots going on there, and we're mindful of several different things going on. But the one I do want to highlight, I believe it was early October, the FCC for the first time ever levied a commercial fine. I think it was on Dish Network for space debris. And so we're curious to watch, is the government going to step in? Because at this point, it's been very much the carrot approach, trying to get people to compete for innovation dollars, to look at on-orbit servicing, debris removal, space situation awareness. Is this ruling with the FCC going to start to drive more of the stick approach behind it, i.e. starting levying fines on, some of the entrenched space players? So that's something I think I would put on everybody's radar as you're thinking about mission planning going forward. That's a key area to watch probably in the next 12 to 24 months, what continuing regulations come out there.
Fantastic note. And things are best when there's both carrots and sticks there, really. I remember long ago we funded a company in the medical space, and they were helping practitioners digitize medical records. But the reason they got traction is that there was a law that was passed that required that you be able to provide all your records at a moment's notice. In other words, you had to digitize your records or you wouldn't be reimbursed for Medicaid. So guess what? They had customers all of a sudden because the stick was coming down the pike. So that's a really good note, Nick. So given that macro environment, who do you see breaking through? And maybe it's obviously some portfolio companies you're funding, but given this trend and as recent as you can think, what types of companies specifically are you seeing that you're excited about, you're tracking closely, You both mentioned like types of companies, but let's get into some specific stories here. John, maybe we'll start with you.
The types of companies that we're seeing breakthrough was so in several of the emerging areas. So specifically lunar infrastructure and lunar programs, NASA has several large upcoming opportunities. And we're seeing some of the small to medium-sized players partner up with defense primes, and in some cases lead or prime initiatives, and they had the opportunity to win some massive programs. And with those programs, if they're in areas that the primes traditionally haven't done, the primes will be looking to integrate commercial services and commercial capabilities into those to fill out their bid. So NASA's lunar terrain vehicle system, LTVS, is one. Another area, commercial comms. So Starlink, we're familiar with the major players: Starlink, Kuiper coming online, Telesat, Rivada, AST Space. The ground segment and the user terminal segment, I think, is an area of opportunity for startups. Starlink has a closed system that uses their modem. The players that are able to integrate with a wide range of networks will have an opportunity. And then there's extensive work being done on the Space Force side and the training and the space operations side. So the Space Force has stood up the Guardian concept where they will have their Guardians train and prepare to actually command and control maneuver satellites on space. So there's a large opportunity in the training and logistics space.
Yeah, I'll jump in and highlight a couple of our investments that I know we're very excited about. So Voyager Space, it's definitely later stage probably than the majority of the audience members here are operating in, but really excited about the opportunity for them to compete as the ISS replacement, and ultimately being a commercial player and also bringing in the big one of John's competitors from Northrop and Airbus, but being a leader in bringing commercial space and commercial space stations to the forefront. I think we're very excited to see how that first one goes in the back half of the decade and what that opens up in maybe the 10 to 12-year horizon. Because I think we fundamentally believe that with the Chinese space station going up, the ISS coming down, that the US government, on at least the governmental side, is not going to cede space and space occupancy to China. And that we think, though, because it's going to be a commercial centric approach, will open up, in the next 10, 15, 20 years, much more space habitation infrastructure. And then the other one, we invested in an earlier stage company called R-Sky. Very excited. Kind of an interesting play to build a software backbone that connects legacy telescope infrastructure. And the reason I highlight that one is for entrepreneurs here, finding antiquated architecture, infrastructure, and providing a software backbone, I think, is a huge opportunity across the space and ground station sector. Dan and the team at R-Sky have built a really interesting interface to connect a lot of huge, think like large research level telescopes, as well as the amateur community, to bring together a really robust space situational awareness suite. So very excited to see how that one progresses in the next 24 months.
Awesome. Two follow-ups here. One is that it was 10:18 Mountain Time when China was mentioned. So that's 18 minutes into the webinar. That's pretty impressive. I thought it would be sooner. Second, I want to go back to something that you said, John, in that talking about the lunar environment and the race to get back to the moon, etc. I've been watching For All Mankind on Apple TV, and pretty interesting premise there. But here we are now, 2024. You mentioned startups partnering up, integrating, working with primes, etc. What would your advice be right now, given the macro environment and the fact that it's a common refrain in space that if we're not partnering, not integrating for the whole system, it's not going to happen. Like, what would be your advice to startups that are brand new? They've got a cool thing here, but maybe not a sophisticated partnering strategy.
I think from first you got to get your name out there, and you need to get some technology validation. And there are programs to do that. The SBIR program is a good one to get some initial validation. And then the SpaceWorks is taking that. They've got a pretty interesting program for on orbit servicing, assembly, and manufacturing. They've got their first version of I believe they call it Space Prime. But so I think you need to get a little bit of government validation, because the primes will be hesitant to integrate unproven technologies into a operational program. So you can either get into study contracts. Each of the primes will have their own SBIR groups that are very willing to work with startups. That they'll provide letters of support, and it's a way to engage early and begin to know the players in those corporations, and they can watch as your technology matures and be positioned to on-ramp your technology to a program of record. So I think that's probably one of the best ways to get in with the prime if you're a very early TRL company. That would be my advice.
And Nick, I don't know if you have something to say about this, but what have you seen in terms of like good behavior, good strategies from some of your portfolio companies, like Voyager or others? What did you see and that helped them get there, with maybe something that had to be a part of a larger?
Yeah, so with Voyager in particular, I think the diversified product offerings that they bring to the table allows them to just compete across a wide number of different projects, programs, et cetera. When you're starting at the earlier stage, though, what I would say is, particularly when you're going after the government dollars, is, to John's point, the innovation ecosystem is a great place to start. But you can very, very quickly fall into the trap of, here's a SBIR phase 1, here's another SBIR phase 1, here's a phase 2, back to a phase 1 on a different program, and you just become, a SBIR mill is essentially the terminology for it. What I've seen companies being successful, and maybe less so in space, because I think in some ways that this is still new to the Space Force, and ultimately what these look like, but across the Air Force, for example, tying it to huge initiatives like Agility Prime, for example, in the vertical takeoff and lift space. So John's point around Orbital Prime and things like that are a good place to start. And then ultimately look to the map of, within the DoD, where does that innovation program eventually lead to? What major, you can look it up by line item where the major DoD procurement programs are. What, i.e., is it space launch? Is it missile defense? Is it SATCOM, et cetera? And have a very, very laser focus on which one of those you're trying to work towards, and ultimately then navigating the system to get to the people who control the dollars. It's program executive offices, program management offices. Those are the people that hold the purse strings, and the sooner you can navigate your way to them going through the innovation ecosystem, the better off you'll be.
Sage advice. I want to move on now to valuations, the fundraising environment as we sit here today. So at the top, I talked about the kind of yearly trend of valuations going down. Actually, that seems to have stabilized at the pre-seed and seed level. It's the Series A and B where we saw valuations decline in those fundraising rounds. But what are you both seeing in terms of valuations at especially the seed level, where most of our folks here are going to be, as of Q4 2023 when we have data? What have you been seeing the past few weeks? It's quite a volatile environment. So what are your insights and frankly your advice when thinking about valuations as people are preparing for their fundraisers?
For the space companies in particular, it's been a challenging year, but it largely followed most of the markets that I invest in. So in that, late stage companies struggled the most. They had the most recaps and down rounds. So B, C, and D. The later, the more difficult it was. We virtually saw no public offerings. There might have been a couple in the aerospace and defense market last year. A handful of M&As, but very slow activity. Early stage, pre-seed, seed, I didn't notice a particular slowdown for space or other industries, A is probably where you start to see it. But the valuations, what we definitely hear from other co-investors is that the metrics to justify an A and a B are real, where they used to be kind of fungible in the 21, 22 timeframe. Investors will want to see certain levels of IRR or ARR for a software company at the A and B stage to warrant, and they will actually, they certainly will use reasonable multiples, both from precedent transactions and publicly traded comps, to now value your company. So where you can kind of, if there was hype and the ability to raise on name and momentum in 21, probably it's back to real metrics that justify each raise.
Yeah, John is spot on everything that we're seeing as well. Ultimately, good companies and good products are still going to get funding. So if you're building, something that is differentiated and you have a market, like, you can get funding. But to John's point, the metrics have to be there. The valuation has to make sense. Being blunt, it's an investor friendly market in terms of valuations right now. I think the big thing too, particularly as we look to the A's and the B's, and as you go from seed to transitioning to A, is probably the hardest step right now for a lot of companies. And really tying it to what are the next big technical milestones that you're going to hit, and being able to, ideally monetize at the A round is something that we're more and more focused on.
Yeah, that ability not only to show that breakthrough on the technology side, but the breakthrough on the traction side at Series A. Maybe you could do one or the other before, but it needs to really be real. And that's what I think is making it hard for some of the deep tech companies from seed to A. There used to be a little bit more, it feels to me at least, there used to be a little bit more give when it comes to, well, we've solved this technology breakthrough. Therefore, let's take the risk here and let's go, and we'll get traction. Or we've got some LOIs, we've got some really great demand, and now at the Series A level, we're going to take that and solve the final technology hurdle. Kind of want to see it all come together, which makes the entrepreneur's job that much more difficult when they're trying to do both at the same time. Let's see. And by the way, everybody, questions, keep them coming. Kelly's going to look at them and see if there are similar ones. And then once I'm done with the next 2 or 3 questions here, we'll get into those. So anything you want to know or dig into, we'll definitely jump back into it once we get to Q&A. Right now, Go ahead.
The only thing I'll add on, if people are hoping to get a sense of what 2024 looks like in 25, my gut is there's such, and space is somewhat insulated from this, but there is a backlog of companies getting into later stage who ultimately at some point are going to have to exit. Investors are going to have to get out. Depending on what happens with interest rates this year, maybe you see M&A start to open up. And John, you're probably a better authority to speak to this coming from Lockheed's point of view than I am. But will some of the primes, as they seek to go after Space Force dollars, will they start to choose to buy as opposed to build themselves for some of these earlier stage where they're a little less multiple sensitive on the price? I think you could see that if again, capital becomes a little bit cheaper over the next 12 to 24. And then ultimately, as this, we'll call it, for better or worse, the SPAC mania that happened in 2021, some of the negativity wears off of that, hopefully. And ideally, to the point earlier around what's next, is it, like watching what Varda's doing with biopharma or semiconductors in space, or is it an on-orbit servicing play? Like somebody getting to later stage and breaking through in the next 2 to 3 years, I think is going to be a good, hopefully tailwind for the market.
That's a great take. Yeah. Please predict the future for our entrepreneurs on the call. John, what are you sensing? What are you curious about? To Nick's point, both from the Lockheed perspective, but just in general, if I'm an entrepreneur, are things going to open up because of election year, this or that? Like, there's so many levers here, but what's your thoughts?
I think there will also be more consolidations this year. Like I said, in some of the crowded markets, even within space specifically, there are a lot of early stage companies that will need to raise to continue, and there may be M&A opportunities and roll-ups this year. There are several firms that are quite active even over the last few years in doing that. But I think in some of the densely populated sectors, there will need to be mergers to form competitive, larger companies that can go after big programs. And there are a lot of technology companies that focus on a specific core thing, call it, say, electric propulsion or something quite narrow. And the primes will want to see, and the government will want to see, a more integrated solution. They'll want to see a package deal that they can buy. It's easier to buy an integrated full propulsion system or spacecraft as a prime or a government than it is to put together all the components. So I think that there will be more integration roll-ups.
Yeah, that for me, that turns into advice that's been there since the beginning when I got involved in space, and that's for entrepreneurs to really think about partnership as a key business development strategy from inception, really, to get to the full system that then the programs of record want to buy or adopt. To have a great antenna, to have a great approach to electric propulsion is important, but only in the context of that being a whole capability. So my software days, it's all about getting customers 1 through 5 and then 5 through 10. This is a different ball game, and you really have to think about, okay, my capability, my unique insight on propulsion, my unique insight about mobility from LEO to MEO and back again. That's great, but what is the overall capability? And therefore, who else should I be talking to about teaming up on this thing so that we build Optimus Prime? I know you all have heard that a lot, and it is not unique to the space domain, but I think it's accentuated here. But always good to reinforce. Any other kind of piece of advice, John or Nick, on 2024 and what to look out for or what to plan for as I'm an entrepreneur thinking about my Series Seed or Series A this year?
I would say, yeah, I mean, you got to be very careful with the cash that you have today. Extend the runway as much as you can. But later this year, I think it's my gut feel that we've seen kind of the bottom or the slowdown. I think we will see more rounds come together later in this year, mid to late year. There's a lot of dry powder available across both private and institutional and even CVCs that's just waiting to be deployed. So I think the future is bright, but you need to be able to weather a few more months or potentially part of the year you can raise a decent sized round later in the year, early next year.
Yeah, I think John's spot on. And the thing that I would say is while we'll call it weathering the storm, batten down the hatches, and then ultimately when you do come up for air and look to set the next valuation, in this business, I understand everybody wants to be the next $1 billion company. Everybody wants to be the next SpaceX, the next Amazon, the big IPO off of Wall Street. But ultimately, be very, very laser focused and realistic on what you think is attainable. Because that's one bad round, unfortunately, in terms of pricing, can ruin the exit potential for both the founder and the investors. So being too aggressive on your price and not having a strong capital strategy, it's going to be, I think, more important than ever over the next 12, 24 as things start to open up.
It's really good. Yeah, just from a physics perspective, I've been reading two things, right? That the dry powder is accumulating in VC funds, and the hatches have been battened down for some time, and funds waiting for the right moment to raise again, and just kind of trying to live in stasis to some extent. So if you have both of those, the pressure is building, and you've really got to deploy, and you've got to raise at some point. So my spidey sense is also later this year. Now that will probably mean some death between now and then in terms of firms that can't batten down the hatches that long, et cetera. Accentuating my earlier point about partnering up, seeking alternate routes, things like that, might be the most pragmatic decision for you, for your existing investors, staff, et cetera. So good stuff to keep in mind, and we could be wrong too. Who knows? We know that the macro environment has been difficult to predict because we were supposed to be in deep recession as of end of last year, and that didn't happen. Maybe it's this year. Who knows? Okay, so I want to go into like a kind of a rapid fire round now, because I see some questions about asking specifics with Lockheed and Marlinspike. So we'll try it rapidly. And you've said some of this before, but for those who weren't listening or joined late, we'll get to some of these that will be repetitive. But first round, what stage do you invest in? John, you go first.
Sweet spot Series A, we'll do seed to the D. The majority of Series A and seed are the majority. Rarely are we founding solo founders pre-seed. Our funding. Yep. Series A.
Great. Thanks, John. Nick, what stage does Marlinspike invest in?
Multi-stage sweet spot is seed to B.
All right, next round. Do you lead or follow? And what's your comfort, one or the other? Nick, you first.
Yeah, we're happy to do both. I think, the way the market cycle has been, didn't actually end up leading anything last year. I guess we did lead a couple of convert bridge rounds, but it seemed so many entrepreneurs were focused on that to the point earlier around capital. But we're happy to do both.
John?
We prefer to follow a strong financial investor. We will lead if the deal is highly strategic to Lockheed, and we feel that we have a strong enough ability to syndicate around. We prefer to follow.
Got it. Good. So this is a twofer. Round 3 here. How many investments per year, and what's the average check size from your fund? Nick?
Yeah, sure. I'll start first. So average check size, if it's seed round, it's going to be 250 to $1 million. A and B is 1 to 5, and then if we do any type of later stage C, that's going to be a $5 million and up investment. Typically, I'll say anywhere between 6 to 8 deals a year.
Good to know. Thanks. John, how about you? Number of investments per year and average check size, and maybe specific to the space line.
Okay, I'll have to break that down, but we start at the fund level first. So we did 15 new investments last year. We did 15 follow-ons of 30. That was consistent with the year with 22 as well, and that's where we'd like to be going forward. Space deals, we have a large percentage of our portfolio space. It was probably 3 or 4 of the new deals were space, and certainly that same amount of follow-ons. And the average check is about $2.5 million. We invest anywhere from $500K to $5 million. Generally it's going to be about 2.5 for the first check in, and we reserve money for follow-on investments.
Thank you. I think we're on round 5 now. I didn't number these bulleted items, but I think we're on 5. This is rapid fire still, so try to be succinct, but what are the key benefits that your firm brings as an investor? John, we'll start with you.
So there's a lot, but I think the things that are unique is that as a defense corporate venture capital, we've been around since 2007, and our fund has grown 3 times. So you can feel pretty confident that we're going to be around for the long term with your company if we make an investment. If we can be a good partner to you. The second one would be that we just ran the metrics, and 90% of our portfolio companies have had some sort of contractual relationship with Lockheed Martin, whether that was a purchase order or we jointly proposed on a government program together. 90% of the companies have been integrated with Lockheed Martin to some extent.
Both good points. How about you, Nick? What makes Marlinspike beneficial as an investor beyond the check?
Yeah, I will echo just to pat John's back. We love working with them because of what he just alluded to. They're a great crew, so highly recommend talking to Lockheed. But with Marlinspike, so we're a smaller fund. There's 5 of us, but we like to say we're small but mighty. And I think what we bring, we like to say we bring a private equity style approach, and that's not a hands-on operational approach, but we really want to take on the entrepreneur's problem sets, and particularly given that we sit in DC. And the amount of time and experience that we have having spent in the public sector, I think we make it a point of pride to find, the innovation cells, trying to get companies to the right program management offices, walking the halls of DC, and really trying to be value add for the U.S. government side of the dual use investment. I think that's where we really, really take a lot of pride in that.
That's great. All right, round 6. What does timeline look like? We've been talking about, hunkering down, batten down the hatches, all the metaphors. But when I need to raise and I call you, I have an initial phone call with Nick or initial phone call with John or somebody on the team. What should I expect after that phone call? And how long would I expect, if it all goes favorably, for that process to last before the tacos are in the bank, so to speak? Nick.
Sure. So one, just in general, I would say the timelines, so for your own planning sake, timelines have stretched. It's harder to get a deal over the finish line due to all the factors that we've already discussed at length here. So when you're planning your capital strategy and budgeting, keep that in mind. For us, from the time that, we get a deck to first call, and then eventually decide to roll up our sleeves, and ultimately enter negotiations, that's probably a 4 to 6 week process for an early stage company. The bigger the company and the later you go, the longer that tends to take as there's more materials. But ultimately, I would expect the negotiations and closing of a deal to take about 2 to 3 months for an early stage seed company. And then the last thing I'll add, I know you wanted clarity. So for us, 6 to 8 deals a year, but obviously that's across all of our different verticals. So in the space side, that means 2, maybe 3.
That's good. Good to know. John, what does timeline look for you?
Well, the first is you should start to engage investors much further out, probably 6 months out from the time that you need to close. So we would like to have been contacted before you officially even get a term sheet. We'd like to have met you and done some technical diligence. From the time that you get a term sheet and you enter the investment pipeline, we've done an investment memo and we're starting to bring you to the investment committee. It's about 2 to 3 months now. And a lot of that, again, is stretched out diligence. And that's where a brand new investment in a new portfolio company, it can be as short as a few weeks for a follow-on investment in an existing portfolio company. We're in the process of, that's an area of improvement for Lockheed this year. We'd like to get that down to be a month for a new investment, but it's longer right now.
Yep. As I like to say, the best time to engage an investor is the day you were born. Would be a good time to start engaging investors. Develop those relationships, make them human, all that good stuff. Very, very good advice. All right, two more rounds here. NDA. Can I get you to sign an NDA? Yes or no? Why not? John.
If it's the first call, an intro call, if it's prior to an intro call, no. If it's the first call and there's highly technical information that we absolutely need a subject matter to see to make an evaluation, potentially an NDA. Likely, we're not going to sign an NDA until we need to do deep technical diligence, and that's probably a few calls in, or when we're actually getting into your data room and going to do a deal. And my advice would be have enough material to get your investors excited without releasing the secret sauce. You should have enough to be able to convince them that it's a good opportunity without having to share the secret sauce.
Nick, NDA, yay or nay?
Couldn't have said it better than John.
All right, round 7. What's the top 1 to 2 blockers that have prevented due diligence from progressing? Thinking about your past deal flow, and again, so that the entrepreneurs can flag those for as they're putting their data rooms together, things like that. Nick, biggest blockers.
Two big things for me. One, there's a softball question that we ask most entrepreneurs at the end of an intro and then prelim due diligence call. What can we do for you? If your answer is you can write me a check and go away, usually it's you can send me money, then we're probably not going to do the deal. Because ultimately you're sacrificing your hard-earned equity for a partnership with us, and we need to do the deal if we think we can add value, and we want to see that you want to leverage us. So that's number one. And number two, and this is where I have to give the culture of SpaceX a huge amount of credit in the way that they bring people out who move fast. Don't be afraid to fail. Have a clear plan and clear goal in mind. And ultimately, so in this context, if your sole goal of raising is just to match a small TACFI, StratFi, or TACFI, it's probably not right for us. We need to see that you want to move fast to capture not just government. You have a vision to scale into the commercial market eventually, because we have to drive a venture-backed return. You can build an incredible lifestyle business, couple $100 million, maybe even top line, scaling up via TACFI, StratFi, et cetera. But very rarely will that actually achieve the venture scale that we need to see.
And for us,
Thanks, Nick. John?
For us, I mean, there's a lot that we can accept, but we cannot accept things that would put Lockheed Martin Corporation in jeopardy. If doing a deal means that we would potentially be deemed a competitor, or if a future acquirer could potentially cancel a contract, and these are specific terms that you would see in a stock purchase agreement and the other documents. But we have to protect the corporation first. Outside of that, you can get away with quite a bit. But there have to be enough protections that future investors cannot jeopardize a major program for Lockheed Martin.
And don't hear him say get away with and take that literally, be
Correct.
solid. But great. This is fantastic. It was a great rapid fire round. So illuminating. I'm going to get into some questions here from the audience with our remaining time. Some great questions. This is always a good one. This comes from Ricardo. To whomever, what is the biggest impediment for small businesses to receive investments? I mean, we talked about due diligence blockers, but specifically, I like this last part he asked. Does receiving non-diluted investment from an SBIR help our case for other investors to jump on the bandwagon? What is the SBIR temperature in the room, and kind of how do you look at some of that non-dilutive funding once you meet the company?
For me, I think the non-dilutive can be very good, but to Nick's point, I'd like to see progress from a phase 1 to 2 to a StratFi, TACFI, or phase 3. If it's lots of phase 1s that aren't progressing to the next stage, that's going to be a little bit of an issue. You can go after the new phase 1s and phase 2 if it's specifically to develop a new, say, line of business. That's a great way to do it. But I like to see that you've made some progress in a particular area with one of them. That would show that you're a growth company. And I missed the first part of your question. Did I cover that correctly?
Yeah. Any other overall obstacles that impede a company from receiving investment?
Okay. Right now, one of the main things that I'm looking for is that your idea is large enough. And I talked about it earlier. If it's, say, a components company, there has to be a vision to be a large enough company that there could be a venture size exit or a very meaningful strategic collaboration with Lockheed Martin. And so that's on a $1 billion+ vision. And you may be a components company now, but that may mean acquisitions in the future or horizontal expansion into additional subsystems or a platform. That's what I'd like to see, that you have a vision to be a large corporation.
Yeah, I'll add on the non-dilutive side. SBIR phase 1 doesn't get me that excited. Phase 2 means a lot more, and then phase 3 obviously is something for us to get very excited about, because that's usually the precursor to a program of record or a larger scale purchase. OTAs are great. A big fan of those, as it means you generally found a way to move quickly through the process and have a clear demand signal for a needed technology. TACFI, StratFis, on the fence about, overall net positive. The big thing that I have concerns with sometimes when we see TACFIs, to the point earlier, is you'll see companies that do a raise solely for the purpose of going after a TACFI. And the piece of advice that I have there is, I've seen it a couple of times where the TACFI is not necessarily conducive to the core product that the company wants to eventually take to scale and monetize. You can quickly go down a rabbit hole of a TACFI, hopefully getting to a StratFi that may not actually meet your end goal. And if that's the case, be very, very wary. I get it, it can lead to a substantial sum of money and keep the business running, but ultimately that can be a conduit to the scenario we talked about earlier, where you build a great lifestyle business, but it's not going to be a huge return business.
Really good stuff here. I'll land the plane by saying, basically something that John alluded to, but if you're on third or fourth phase 1 SBIR, that is where it could become the black eye of being perceived as a silver mill. So whereas that could extend runway, keep your principals on board, etc., just recognize that if you do that, you're also kind of akin to not setting up fundraising to be healthy at each round, taking too high a valuation early so that you force a down round later, taking too many lower level SBIRs or not as quality SBIRs can hurt you later on. So always be aware of that. Let's go to a couple more questions, and then I'll have requests for contact info and talk a little bit about how to contact you the best way. But anonymous attendee says, from a prime perspective, what is a more attractive M&A target? A company developing or supplying tech that can be commoditized as well as vertically integrated? Example, refueling interfaces, SDA sensors. Or is it more attractive to be a company developing full up solution, the bus manufacturer, life extension servicer? Does that question make sense?
It does. For M&A. I'll caveat it by saying I'm in the ventures group. We have a separate corp dev group that does M&A. What's more attractive between the two? Yeah, I think the answer that our corp dev team would probably use is it has to be a large enough deal for them to take a look. If it's a small, say under low double-digit millions, it's probably too small for a prime to even look at rolling up into the corporation. It potentially, in very limited cases, we're really going after a new program, but generally we're probably looking at bigger merger and acquisition opportunities in the 9 to 10 digit. So in that case, it's probably the integrated solution that's easier for us to on-ramp and onboard.
Nick, you got anything on that?
I mean, John's a better expert on how Lockheed would think, but what I would say is it's probably easier to be an enabler, i.e., you're providing a piece of software that can scale across multiple platforms, or a piece of hardware, maybe it's a compute stack or a sensor or something, to be an enabler across a multitude of different platforms, than it is to be a larger, we'll call it single system, i.e. a bus manufacturer, as those guys I think Lockheed and I know Northrop has, and then you've got a couple of startups in the space getting into the commodity bus manufacturing, for example. At that point, if they view that market big enough, tend to find that they may just do it themselves.
Great. Final question before we get into your contact info and how you like to be contacted. This is the help the client write the RFP question. And is this happening? So have you seen specifically in your portfolio companies, there's a niche technology there. Have they been able to get traction by helping their DoD customer to understand well enough that the DoD customer writes requirements that make it possible for that niche company to be integrated into their prime technology? That's the question.
I think I understand the question. To rephrase it, is it common that a niche company can work with a government customer to get their requirement written into, say, the budget or a program? Yeah, but the very small companies I think will really struggle to do that. You have to have a pretty network with those government customers to have that level of influence. Medium-sized companies probably are able to do that, but I think it's pretty difficult for a small company.
Yeah.
Right.
Oh no, sorry, John, didn't mean to. I would. The only area where I've seen that be somewhat successful is if you're gunning more in, we'll call it the research like heavy research area contract, i.e. stuff that DARPA puts out. Have seen a couple of like material science companies, one of them in our portfolio, be pretty successful in shaping the requirements for a pretty large contract. But I wouldn't. Most startups that's not going to be applicable to, and I don't know that necessarily translates as well into space.
I will say that you can influence the SBIR topics fairly reasonably well. The SBIR, government SBIR programs will often solicit inputs from groups they trust that will be using the technology for them as a prime. And if you're working with primes or the other agencies that maybe execute SBIRs on behalf of the Air Force, Space Force, you can potentially influence a topic getting into the next SBIR list of topics.
Really good. Gentlemen, thank you so much. Kelly, you might want to start putting some links into the chat for follow-up here, next webinar and stuff. I know we're up against the hour, but both Nick and John, please put your preferred contact info in. And also a little note on, as you're doing that, what if I'm a startup, I'm interested in establishing a potential investor relationship with you. What do you like to get in that first email? Just the pitch deck plus financial model, pitch deck, financial model, and kitchen sink. What do you prefer?
In the first intro call, definitely need a pitch deck or an executive summary. It doesn't have to be before the first intro call, but as a result of the intro call, in order for me to do anything beyond that, I need a pitch deck or an executive summary. It probably will need a disclosable, non-NDA version of a technical deck that I can share with our subject matter experts. If it's a company that I like enough to, and I think there's enough of a fit with Lockheed to break it to the next level, the next step is to have our subject matter experts take a look and have a technical call with the company if they see a fit for you as well. So I would need a technical deck, enough information to get our subject matter experts excited to have a second call.
Thanks. Nick?
Yeah, pitch deck for sure. That's kind of the starting stakes. And then what is super helpful to John's point, not an NDA level, but at least a product one pager with, what's the key differentiation here that I can wrap my head around and then start to run around our network as well to to stress test that.
Wonderful. As you're putting in the details in the group chat here, I'll send it back to Kelly. This has been fantastic. Thanks, gentlemen, for talking with me. And Kelly, let's take us home.
Yeah, I agree. This is an amazing opportunity. I think you guys really just gave such great information. Thank you all for being here. This is, our next event will be how to get your payload to space with Veronica V. Hill of the Space Test Program. So if you're wanting to take your technology to the next level, if you want to get to, you know, advance your TRL level, this is it's going to be a great webinar about how you might be able to do that. One way you might be able to do that. So I am unable to copy and paste, and I apologize for that. So we will send that link to that next webinar with our follow-up email, along with the article that TJ mentioned at the beginning. So apologize for that. Also, just keep an eye out. We have our Space Fiesta coming up on June 6th, and we'll give you guys more information on that in our follow-up email as well. But it'll be something you guys won't want to miss. We're going to have universities and, you know, just everybody in New Mexico that is involved with space. We're trying to get them together for that. So stay tuned for more information. As you leave, you're going to get a survey. So please fill that out. It helps us inform our future programming. And oh, looks like Demetria got on and she's doing it for me. So Demetria is awesome. She saves the day all the time. So anyway, thank you all again for being here, and we will see you next Thursday when we talk about getting your payload to space.
Thank you for having us.
Hey, bye-bye.
Yeah, thank you.